I understand that a lot of ICT traders struggle to identify order blocks, and there's 1,000 different opinions on how you should trade order blocks. So in this video, I'm going to be showing you exactly how I personally view order blocks and use them on a daily basis in my analysis. Okay, so this is basically how I view order blocks. Now, a lot of people will tell you this and that. They'll tell you it needs a liquidity sweep, it needs to do this, and it needs to do that, okay? I want you to forget about that. This is exactly how I view order blocks. So obviously we have an uptrending market just based off of these 5 candles, all very green bullish candles, but then all of a sudden we get a bearish candle closure followed by a bullish candle closure. Okay, so this is what I identify as an order block. Okay, if there is a bearish candle and it has 2 bullish ones next to it, that is, in my opinion, a bearish or a bullish order block. Okay, and now some people will draw it from the wick. I find the most success by drawing it from the body. So this is exactly how I would draw my bullish order block. It doesn't need to have the liquidity sweep, right? It doesn't have to be a demand zone or supply, whatever, okay? It doesn't need to have a huge rally after or before it, okay? It just have to be like an oddly placed candle, kind of. You could look at it that way, right? You have a really uptrending market, you have very consecutive bullish candles. Then you get one bearish candle closure, and then that bullish trend continues, right? That bearish candle closure is your order block. Now, there is higher probability order blocks, and there is lower probability order blocks. Higher probability order blocks will usually have a fair value gap right above them, right? So this right here would be a higher probability order block, right? Because we have an order block, and then we have this fair value gap right above it. Okay, some people will tell you that an order block has to have a fair value gap right above it. It does not. Okay, not in my opinion, at least. This just makes it higher probability. Now, the highest probability order blocks you will ever find is when there is an order block inside of a fair value gap. Okay, that automatically make the order block way higher probability and the fair value gap. But I am gonna show you exactly what I mean by jumping on an actual chart. So let's look at the first example of an order block. We have 3 consecutive bullish candle closures. The next one is a bearish candle closure. Then we get a bullish one, right? But this is technically not an order block yet. For this to become an order block, we would need a candle closure above here. When we get a bullish candle closure above here, this now becomes a valid bullish order block. So let's take a look at the next candle. That indeed closed above, validating this bullish order block, right? So if we wanted to trade this, we would base our entry off of the body. If you ask me, some people like to do the high. I will never do the high. I will always do the body, right? So let's see what happens. And as you can see, price quickly taps that order block and then goes flying, right? This is a very, very easy way to catch moves on a very trending day with little pullbacks. Let me give you an example. So as you can see right about here, we have a very bearish trending day and we get very, very small pullbacks, right? So in this case, I would personally love to trade an order block like this. Now, why would I love to trade an order block like this? Because we have an obvious lower drawn liquidity, right? The market has no reason to reverse around here, okay? And I just told you that a high probability order block has a fair value gap right below it. And that is exactly what this order block has, right? We have a bearish order block. Again, you can see it, very trending market. We have a lot of bearishness. We have a bearish candle here, bullish one here, and a bearish one here, right? This candle closed below this one, validating the bearish order block. Now, because it has a fair value gap right below it, that validates it even more. So if I were to short, it would look like this. Maybe I would put my stop here and go for 1 to 2. And there you go, right? Very, very beautiful. Now, during this trade, we actually got another very high probability order block. So an order block does not have to be just a singular candle. It can also come in multiple candles, right? So this one right here had 2 candles, right? But that is still a bearish order block, right? What is this? A fair value gap, right? Now this one here overlaps with the order block, meaning the order block is inside of the gap, right? Here we had a bearish gap below it, right? The order block was not inside it. Here we have an order block inside the gap, right? that makes the fair value gap and the order block higher probability. You can, of course, choose yourself whether you would enter off of the gap or the order block. That depends totally on what you're most comfortable with, right? But this is what a high probability fair value gap looks like. And this is also what a high probability order block looks like. Here we see it again, very beautiful. We get this huge bullish displacement to the upside. Then we have these two consecutive bearish candles, but then we continue to displace higher, right? These two candles are now one order block, okay? It has a fair value gap right above it. So that means that this is a higher probability order block, okay? So this would totally be valid to enter off of. Target the previous high. And there we go, just to the tick, right? But this is basically what an order block is. It doesn't have to be a singular candle. It can be two consecutive candles, right? When we go on a 2-minute chart here, that is just a 2-minute order block, right? We have one singular candle on a 2-minute chart, but on a 1-minute chart, we obviously have two, right? So it doesn't matter whether it has 2, 3, 4, or 5, right? Because if we had 3 bearish candles here and then a rally higher, that would just be a 3-minute singular candle order block, right? 3 candles, 4 candles, 5 candles, it doesn't matter, okay? It could be an order block nonetheless. So this right here is a great example on how to use order blocks to catch moves that you originally missed, or catch moves during trend days with low pullbacks, right? So here we have a fair value gap that just got hit, but maybe you weren't comfortable with it, right? So you missed it. But luckily we create a bullish order block here, right? So as soon as we hit it, which we do right here, you can enter, right? So say you missed the gap here, your next entry is going to be this order block. Again, we have it right here. Obviously we are in a bearish trending market. Let's play it out. Now we have an order block right here, right? Now, ideally, you would probably want a more significant candle closure below the bullish candle. However, this still did close below it, validating the bearish order block. So that would be my entry. Stop at the highs here. Then target this obvious swing low here. Let's see. Notice how the next candle just barely hits the order block and then rallies down lower, right? That is what will often happen with these order blocks, and that is why you can get such great entries with order blocks and kind of catch moves without needing a pullback, right? Because there's a fair value gap here. Let's play it out, right? This fair value gap never got hit, but the order block just got filled, right? So on days like this, order blocks are just great for entries. Now here we have another great example. As you can see right here, we consolidated for a little while, forming 2 bullish candles, a bearish one, 2 bullish candles, a bearish one. So because it looks like this, I would consider this whole consolidation one big order block, okay? Now, if we actually take a closer look, we can see that that bearish order block overlaps with this bigger imbalance, right? Now, that imbalance makes the order block higher probability. So in a case like this, where you have such a big gap, you probably would not want to enter all the way down here, right? That would require way too big of a stop. So you could enter off of the order block that is inside that gap instead and get a better risk to reward or stop loss placement, right? And again, I draw my order blocks from the body and not the wick, okay? This just has a way higher strike rate, and sometimes you will get order blocks with insanely large wicks, so you just don't want to trust that. Right here we have another great example of an order block. We have this huge bullish candle that's sort of just is misplaced, and what the price do, it came up, hit the order block, rallied down lower. Some people will call this a supply zone or demand zone or whatever. These are just order blocks, okay? And yeah, that was this order block video. As you can see, it is just not that complicated. A lot of people tend to make order blocks way too complicated, needing all of these liquidity no, okay? It's just misplaced candles. That's all it is. This is exactly what I do in my analysis when utilizing order blocks, and it works totally fine, right? I just showed you historical data of it working. You do not need to know all the fancy stuff, okay? That is what an order block is. So I hope you enjoyed, and I hope you understood exactly what an order block is. I tried to make this video as short as possible. So yeah, I hope you enjoyed, and I'll see you in my next video.